SoundHound AI and BigBear.ai are two of the most innovative growth companies in the stock market today. Investors are looking at the AI industry and the rapid growth that's forecast over the next decade and are trying to invest in those new up and coming stocks that could deliver 5x, 10x, or even 20x returns. Big Bear and SoundHound definitely have that kind of potential in the long run. But which one is the better stock to buy today? That's the question I'm going to answer in this video by comparing these two AI companies head to head across several critical financial categories, including revenue, return on invested capital, and cash flow from operations. I'll also share with you my proprietary discounted cash flow valuation models for Big Bear AI and SoundHound AI to come to a conclusion to answer which one I think is the better buy today.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Starting with revenue growth, Big Bear AI was earlier to the game in generating that big burst in revenue in 2020. But in more recent years, SoundHound AI has generated better revenue growth than Big Bear AI, growing from less than 50 million in revenue in 2023 up over 100 million in revenue in the most recent trailing 12-month period. Meanwhile, Big Bear AI has grown revenue and actually experienced revenue decreases over recent years, while SoundHound AI's revenue growth has been consistently positive and in some quarters was better than 100% year-over-year growth. Of course, both companies have made acquisitions in recent years, and that's helping generate revenue growth. SoundHound AI has a more diversified customer base, while Big Bear AI depends more largely on government contracts. Depending on which side of the market you're more enthusiastic about, that could determine one of the bigger things that leads you to invest in one of these companies versus the other. So the next thing I like to compare companies on is their returns on invested capital. It demonstrates to me how good management is at taking investor money and turning it into products and services that generate profits and cash flow. Now, a lot of times, especially with younger early stage companies in their growth phase, these numbers will be negative, but I'm okay with that. What I look for next, if the number is negative, is a positive trend line, is that the negative is getting smaller and approaching positive. But I don't quite see that in consistent fashion for either of these two companies. But what I do see over the longer run is improvement. Even though it's not consistent improvement, I can zoom out and look at it in the long run. And there is improvement where SoundHound AI went from 149% negative to 62% negative. Big Bear AI went from 28.3% negative to 14.9% negative. So they each demonstrated improvement in lowering the negative in this critical metric that I consider for evaluating a management team and how effective they are at choosing a business model, retaining a competitive advantage, and sustaining it and growing it in the long run. Now, when I see these figures, I also like to look at cash flow from operations, especially with growth companies, because a growth company in early stage, when it hits that inflection point and it becomes sustainably positive in cash flow from operations, that lowers a big risk because at that point, that company can sustain itself. It doesn't need to go to investors and ask for more money. It can sustain the business through internally generated cash flows. And that lowers the risk of the business significantly. Unfortunately, neither of these companies are there yet. And the trend actually looks like they're getting worse as the business is growing. Big Bear AI has seen its cash flow turn from a positive, small positive, but it's turned negative. And in the most recent trailing 12-month period, that cash flow from operations was negative 30 million. And the same thing with SoundHound AI. We're not seeing consistent improvement, even though the number is negative, we're actually seeing consistently getting worse as the business is growing. The cash outlook flow from operations is increasing, which I don't like to see. So now that we've seen some backward looking metrics on these companies, let's start looking at some forward looking metrics and valuation, right? Because my valuations depend on the expected free cash flow the business will generate in the very long run. I discount those estimated future cash flows to get the present value of this business. And that calculation for BigBear.ai has the business worth $3.18 a share, while the current market price is $3.62 a share. So I would say this business is fairly valued because I like to apply a margin of safety between 5 and 10%. And then when I'm dealing with more volatile, earlier stage businesses like BigBear.ai, I expand that margin of safety even more. So when the valuation is so close with the current market price, I just say that it's fairly valued. I'm not going to say that it's overvalued because of that price difference, because of the margin of safety. Now, with SoundHound AI, I get a different outcome and I get a more certain outcome. My intrinsic value per share calculation for SoundHound AI has the business worth $4.06 a share, while the current market price is $10 a share. And so with SoundHound AI, there's enough of a difference there. There's enough of a gap where I can confidently say that according to my calculation, that SoundHound AI stock looks overvalued and significantly overvalued. And so comparing the two on valuation, SoundHound AI has a significant difference there. And regarding other metrics like the revenue, the cash flow from operations, and the return on investor capital, they were both similar in the numbers. They were negative. They were demonstrating improvement on return on investor capital, lack of improvement on cash flow from operations. And SoundHound AI demonstrated more recently better revenue growth than BigBear AI, but not enough of a difference to justify the paying a significant overvaluation for SoundHound AI. So therefore, if I had to pick between these two AI stocks right now, I would pick BigBear AI. BigBear AI would be my preferred choice between these two right now.
Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.